Today is Thursday, July 28th, and this is the ADM Investor Services Weekly Market Review. Today's guests are Alan Bush, Senior Financial Economist here at ADMIS, and Steve Freed, VP of Grain Research. Steve, as we leave July and enter August, what are the key issues for the grains?
I think there's three main issues. Number one is we have to figure out what the size of the crop is and what kind of weather conditions we're going to see in August. We're going to have to figure out the demand side, and we're also going to have to look at some of the outside markets, where the money is flowing, the dollar, if crude oil is going to continue to work lower. Right now, we think that we've got a big crop, big demand, which at the end of the day probably means a little bit lower prices.
What is the U.S. Midwest weather forecast for the next 2 weeks?
It's interesting that today you have two weather maps that are long-term. One is hot and dry and the other one's normal. So I think the market's going to lean towards more of a normal forecast. So a little bit of heat's not going to be a problem. We've had plenty of moisture across most of the Midwest in July. So I think that in general, the weather's going to be good for crops.
Any talk of what the U.S. 2016 corn and bean yield is?
Right now, the USDA is using a 168 corn yield and a 46.5 soybean yield. If we look at the crop ratings, right now I would say that the yield's probably closer to 171, and for beans it's 48. So that would add supply to the marketplace and offer some resistance to prices if those yields are achieved.
And what's the USDA currently using?
168 in the corn and 46.7 in the beans. And I think that a month ago that was a good number, but I think that with this July rains we could see a little bit better.
Should farmers sell a rally over $10 beans, $3.50 corn, and $4.40 wheat?
I would say yes. I mean, I really think that there's a chance that we could break below $9 beans in the fall, and chance we could get closer to $3 corn in the fall if the weather's good and if the farmers sell the grain at harvest time.
And is there enough downside in market to buy puts?
I think most of the decline in prices is over, and while the volatility is low, I don't think that you would get the bang out of the buck for the puts as you would by either selling cash or if you want to take on selling the futures, that probably would be better, because the option premiums far out are cheap, but that would mean the market has to go a long ways for you to get in the money.
Alan, the gold market is off its highs, topping at 1317 earlier this month. I'm sorry, 1377 earlier this month, as flight to quality longs are liquidated now that the UK vote to leave the EU may not have been the economic disaster that the Remain campaign said it would be. What is the outlook for gold futures now?
Okay, well, the outlook is still very bullish, because now that the Brexit situation is not so much in focus, what we have remaining is the inflation outlook. And if you recall, inflation first started to show some signs of coming back last November, and we are continuing to see indications that inflation is with us and is likely to accelerate. So that is likely to be the driver that takes the gold to new highs, and also the strength that we are anticipating in the gold market is probably going to last for several years.
What is the outlook for the U.S. dollar in light of this Wednesday's Federal Open Market Committee decision to leave interest rate policies unchanged?
Well, actually, the dollar is a little bit lower today, and that basically is because many analysts were thinking that the Fed statement yesterday would be a bit on the hawkish side, which was not the case. It was just a neutral statement. So the dollar under a little pressure today because of that. But longer term, it still appears that the Fed is likely to raise interest rates, I think possibly by the end of this year or early next year. And keep in mind that the Fed is the only major central bank that is on track to raise interest rates. We have the ECB with an ongoing quantitative easing program. We have the Bank of England likely to lower rates at their August 4th meeting. The Bank of Japan likely to add more stimulus at tomorrow's meeting. So the dollar index, we believe, is headed higher, and I think this is a trend that will last through the balance of this year.
The S&P 500 and Dow futures recently advanced to new historical highs. What is the outlook for stock index futures now?
The outlook is still the same. We're still very bullish on all of the indices, and if we're right in our thinking that interest rates will stay low globally, that will be the dominant influence that continues to support stock index futures. So we were looking for higher prices in all of the indices through the balance of this year, well into next year. And we've had a lot of questions about the political situation, who might be in the White House next year. From my point of view, it really doesn't matter. As long as rates stay low, stock index futures are going to continue to work higher.
Please remember that the opinions expressed here today are solely the opinions of our guests and not necessarily the opinions of ADM Investor Services or Archer Daniels Midland Company. If you have any questions or comments or would like to know more about our services, please contact us at www.admis.com.